Hi, this is Jeff Ellis from Simple Forex System and now renkogoldmm. This is our free training package that will teach you how to trade gold through your Forex brokers and get yourself in a position where you can start earning about $2,000 a day in a very short period of time. This first segment is going to be on money management, and I have been known to say in the past, and I've written about this extensively, that is my belief that money management is actually the holy grail of Forex trading. It's not a system, it's not a method, it's not an EA, but rather how you manage your money during a trade. And if you can learn the skills necessary to properly manage your money during a trade and to manage the trade itself, that is what is going to guarantee you success. There are people out there that are trading systems that only win 3 out of 10 times, and they are making a fortune doing that. And that is simply because they know how to trade and how to properly manage the trade. So we're going to go over at least one aspect of that in this video. This will probably be the longest video. The other two are actually fairly short because there's just not that much to say. The method we'll be talking about later is actually very simple to learn, very simple to spot. And so it's really the most amount of time we're going to spend here is going to properly be spent on money management. Now, conventional wisdom says that you don't want to risk more than 1 to 2% on a trade, and in most cases that's true, and certainly for most traders that's true. That's simply because most traders really don't know how to manage a trade properly, and therefore need to keep their risk levels down to sort of a minimum, an absolute minimum, if you will. But there are times where risking more than 2% of your account can be justified if you're using a system that wins more than 70% of the time. And that means even people who really don't have good money management skills can then take advantage of a high win percentage trading method and use the increase in the risk factor to rapidly grow their account. And along those same lines, there are times when risking 10% of your account on a single trade would be considered sound money management. You may not agree with that right now, but stick with me, follow along. I think I'll be able to convince you of that. Let's take a look at an example of using, say, a $1,000 account. And we're going to use a 20 pip stop loss, and we're going to use a 20 pip take profit. And we're going to compare the risk reward that you get from using the traditional 2% risk, and then compare it to what happens when you do a 10% risk. Okay. If you're using a 2% risk factor and you're winning 70% of your trades, that would bring you a return of 8% after 10 trades. Now let's take a look at the math and show you how that works out. You have 10 trades. You're going to win 7 of them. That's 70%. That means you lose 3 of them, or 30%. If you're trading, just a mini lot, $1 lots, and you win 20 pips, you're winning $20 times 7. That's $140 in wins. You lost 3 trades, which was $20 times 3. That's 60. So you have a net gain of $80 on your account. An $80 gain on a $1,000 account equals 8%. If that doesn't look right to you, just get rid of a 0 off of each number. $8 over 100, that's 8%. 80 over 1,000, that's 8%. So the math, it does work out. I'll just have to ask you to trust me on that. Using the same 2% risk factor, if you won 80% of your trade, it would bring you a return of 12%, which would be, 8 wins of $160, 2 losses minus 40, gives you $120 over $1,000. That's 12%. And if you're winning 2% or risking 2% and winning 90% of your trades, it's a return of 16%, which is 9 wins, actually 1 loss. It says 2 losses there. I should say 1 loss. $180 win, $20 loss, $160 net gain over $1,000. That's 16%. But look what happens when you amp up your risk factor to 10% using those same win percentages. If you had 70% winners, to risk 10%, you'd be trading 5 mini lots and 20 pips stop and profit for each trade. So each win is going to be worth $100. Each loss is worth $100. that would work out to $700 won off 7 trades and $300 lost off 3 losing trades for $400 net gain, and 400 over 1,000 is a 40% gain. 80% winners is $800 won on 8 trades minus 200 loss on 2 trades for a net gain of 600, which is a 60% net gain. And 90% winners is 901 minus $100 loss, which is an $800 gain over a $1,000 account, which is an 80% gain. Obviously, if you're trading at this level and you're trading a method that wins at this level, you're talking about your account getting to the point where you're doubling after 10 or 12 or 13 trades on average. Again, keep in mind you're not always going to win 7 out of every 10 trades or 8 out of every 10 trades. Those are numbers that just simply apply to the overall win-loss percentage of the system. There are streaks that come and go. I mean, I've won 15, 16, 17 trades in a row trading this. I've lost 4 or 5 trades in a row trading this. So wins and losses do tend to come in streaks, and so these figures represent just the overall win-loss percentage. And along those same lines, you will lose some trades using this method. Now, if you're mature enough to accept that, then you're mature enough to use an advanced or an increased money management number, an increased risk factor number. If you are not mature enough to accept the fact that there will be some losses, you need to just shut this down and go somewhere else, because you're just simply not mature enough to be a trader. Now, there are some rules that we put into place to help you limit the damage on some of these losses, and as long as you follow those rules, you're going to be okay. Rule number 1 is you want to set a PIP and a percentage gain goal for the day and quit trading once you've achieved that goal. We include in this package a calculator that you can use that once you land upon a PIP goal for the day, and I use 20. 20 is a great goal to use. Once you land on that a goal and figure out what the percentage is you want to earn for the day, when you hit that number, quit. The worst thing you can do is stick around and let your emotions and the euphoria of winning get you back into another trade, because inevitably you end up giving some money back. Then you find yourself having to get into another trade just trying to get back to where you were at, and you run the risk of losing more. And anybody that's been trading for a while understands that cycle, and ultimately you just blow up your account. So, I mean, you set a goal. When you reach your goal, you quit, you come back tomorrow and start over again. Rule number 2, you want to start small and work your way up. I mean, it only takes a few weeks of trading to get to the point where you're going to be able to pull out $2,000 a day on your trades. So don't rush it. Just let it happen naturally. You may have some setbacks. You may have a couple of days where you've got some losers, so you have to spend a couple more days trying to get it back. So it sets you back on your timetable a little bit. Don't worry about it. You will get there if you trade consistently and if you follow the rules of the method. Not just the money management rules, but also the trading rules that we will describe in one of the next videos. Rule number 3. Set a PIP and percentage gain goal for the day and quit trading once you've achieved your goal. Now, you may say, hey, that looks an awful lot like rule number 1. Well, that is rule number 1. And it's also rule number 3, because most people ignore this rule and they let their emotions get the best of them. Either they get into a situation where they took a loss and they decide to throw everything out the window and pile into the next trade to try to get everything back on one trade, or punish the market for making them feel bad, or whatever crazy emotions are running through their head at the time. Or worse, they're in a state of euphoria because they quickly made their 20 pips for the day, and this method will allow you to do that within sometimes a matter of seconds. Okay, literally a matter of seconds. You'll be trading less than a minute on some days. But you get it so quickly, you say, wow, I want more, and there's more to be had. Let's jump in and get more. And yeah, some days you may get more, but there's a lot of other days you're just going to blow your account up, and you're going to find yourself either in an extremely deep hole that is very difficult to get out of, or you just flat blow your account, which is not going to help you out at all. So rule number 4, set a PIP and percentage gain goal for the day and quit trading once you've achieved that goal. Okay, is the point made? You understand? I mean, I'm sure you do, but there's a lot of people out there watching this that are not going to do that. And I want you to understand, this is how important this is. You need to have a plan when you go in for the day. When you have executed that plan successfully, you close up shop. Come back tomorrow. Okay, that's all I can say. I've said it 3 times. That's it. It's a rule. Live by the rule. Now, I've talked about using a 2,000 daily goal, and you may be wondering, gee, why are you shooting for $2,000 a day? Why not $10,000 a day or $50,000 a day? The reason is $2,000 is a figure that most people can relate to, and they can deal with that number without suffering any severe psychological, physical, or emotional damage. Most of us have held $2,000 in our hand at one time or another. Okay, so I mean, it's not one of these goals that's out there, some mythical number that only the chosen few will ever be able to get to. If you're trading 10 full lots, $100 pips, and you have a 20 pip goal, that's $2,000 for the day. All right. Now, 10 full lots may seem to be a lot to you right now, and it probably is because most of you aren't trading at that level. But it's something that you can get up to, and you can get up to it fairly fast. And I think you can get to that level and trade to that level without absolutely flipping out when you see that you're in a small drawdown situation. It's just a number. I think I said it, not really arbitrarily, but I just from talking to a lot of traders throughout the years. I think that's kind of where the wall is for a lot of people. So you can get up to this level. You're not going to be able to get any higher than this, at least not for a while, but you can at least get to this level without losing your mind if something goes wrong. The other thing is $2,000 can be achieved by anybody with an account of any size, really, from $250 up to maybe $2,500 in as little as 20 to 60 trading days. Again, we have a calculator. It's part of the package. I'm going to go in a couple of minutes. You're going to get to see the calculator in action, and then you'll understand what I'm talking about in terms of using a higher risk percentage and more quickly achieving the goals that you have. And finally, $2,000 a day works out to about $500,000 a year in income if you can consistently earn $2,000 a day. And I feel pretty comfortable in saying 99.999% of you who are watching this could live very comfortably on $500,000 a year. There may be somebody out there watching this that's that's the money they keep in their in their car. They keep it in the ashtray in their car to use for tips and parking. Okay, I mean, maybe it means nothing to you. For the rest of the world, believe me, $500,000 a year it puts you in the top 1/100th of 1% of income earners. Okay, so anyway, but like I said, it's a goal, and you can revise the goal up, you can revise the goal down. If you're one of these people that can handle trading for more, you get bored after a period of $2,000 days and trade more. If you're somebody that just absolutely cannot fathom the idea of trading for $2,000 in a single day, and maybe $100 a day or $500 a day is your absolute maximum that you can handle before you go into convulsions when things start going wrong, fine, use that number. This is just a number I'm throwing out here. You're certainly free to shoot for anything that you want. I'm just using this as sort of a starting point, a jumping off point. So if you want to trade for more, trade for more. If you have to trade for less, trade for less. It's up to you. But the point is there we have a method, and you're going to learn that method shortly. It has a very high win percentage, and it's you're going to be in a position where you can do this if you really want to. So let's take a look at the calculator, see how it works, and then I'll be back with just a couple of closing thoughts. Okay, what you're looking at is the Renko Gold Capital Growth Simulation. It's a spreadsheet that runs off of Excel. If you do not have Excel, you can go to openoffice.org. I believe that's the web address, and you can download their package of programs. It mimics basically Microsoft Office, and so you get the Open Office version of Excel, and you can open it up with that. And what this calculator does is allows you to determine on a percentage basis what how much growth you want to have in your account on a daily basis, and starting with your starting account balance, it tells you how much you need to earn during the course of that day in order to get to um, that percentage, that level. In fact, if you look at it right now, it defaults with an initial capital amount of $10,000 and a daily growth rate basically of 5%. And if you look down here at the first period, 5% of 10,000 turns out to be $500. Yes, that math is pretty easy. And so you need to earn $500 in order to get 5% on that amount. Now, what I recommend you do is every day before you start trading, open this up, come over here to initial capital. If you double click, the number becomes live. You can use either the delete key, which I'm punching on now, or if the cursor is in front of the 0, you can also use the backspace key. Type in your account balance for the day. Then come down here to the period ROC. Double click on that. It becomes a live number as well. Don't worry about the percentage marker. Just type in whatever percentage you're trying to earn. So let's say you're going to go for 8% a day on a balance of $5,000. That's what I've typed in. If you do that on $5,000 account, 8% equals $400. That would mean if you're going to use, say, 20 pip goal, you would need to have a pip value of $20 per pip, which works out to 2 full lots. If you look in the PDF, I go through the math on that extensively, show you how to work all that out. But this is just a way for you to see, how what your actual dollar goal should be every day when you're trading in order to stay on track with whatever your percentage per day goal happens to be. Now, just to give you an idea here, I said the idea was you're wanting to make about $2,000 a day. If you start with a initial capital of $2,500 and an 8% goal, if we scroll down here, we see that when you get to day 31, you're making $2,000 a day. That's a month and a half worth of trading, assuming 20 trading days in a month. If you're starting with a higher account, 5,000, 10,000, obviously it's not going to take you that long to get there. If you're starting with a smaller account by chance, let's say $250, and you have 8% as your starting account balance, I mean, you're only going to be going for $20, a day, which is one mini lot and 20 pips. But you can see as you scroll down here, when you get to day 61, you'll be making $2,000 a day. Now that's 3 months of trading at $20 or 20 trading days per month on average. Actually, I think it works out to 22 trading days, but let's just keep the math simple and say that you're 3 months away from being able to do that. And frankly, a lot of people, if you could make $500 a day, you'd be in great shape. Especially starting with a $250 account, and I mean you can get there in 43 trading days. That's only 2 months away. So with some patience, some discipline, and just following the rules of the trading method and stopping, again, let me just make this one last point, stopping when you reach your goal for the day so that you don't put yourself in a position where you end up losing it all plus some and start digging that hole that you'll never get out of. You're going to be able to just clip along at a real nice rate, and 20, 40, 60, 80 days from now, you're going to be sitting in a position where you're actually finally making serious money from trading Forex, and of course that's the idea. So I'm going to go back to the PowerPoint presentation for a couple more points, and we'll wrap this video up. Okay, the last couple things I want to cover here real quickly is one of them is leverage. The brokers that we recommend, the brokers that I know this method will work with because I have live accounts with them and am trading this with them, and they have absolutely no problems with what I'm doing, and I think would welcome all the extra business. They offer up to 400 to 1 leverage. Generally, you're going to default at about 100 to 1 leverage. And if you're trading a single mini lot in your account at 100 to 1 leverage, it's going to tie up $120, $130, $140 on one trade. And if you're starting out very small, if you have you're only starting maybe with $500 or something. That's a lot of money to be tying up, and it leaves you with very little left to handle the normal swings of trading. So what you want to do is go into your back office and file a request with the broker and ask them to increase your leverage to 400 to 1. And all you have to tell them is that your trading style requires you to place additional trades during the course of an existing trade while an existing trade is open, and that you need the additional leverage in order to have sufficient funds available to handle the up and down swings in trading. I mean, that's really all you have to tell them, something along those lines. And they'll let you have the higher leverage. Now, you're not going to, just because you can place like a 2 full lot trade on a 400 to 1 leverage account with like $500 in it, doesn't mean you're going to do it. You're not going to do it. That's insane. You're going to lose all your money if you do that. But having that the ability to have enough money left over that you can actually place an additional trade or two and still have sufficient funds left to manage the trade and to absorb any back and forth price swings, it's invaluable. So make sure you ask for that. The last thing I'm going to talk about quickly, taxes. If you live in the United States, you're going to get to the point where you're going to pull some money in and the government is going to want their cut. And I do not give advice on taxes. I do not offer guidance on taxes. Don't even bother asking me for advice or a referral because you're not going to get one. Find somebody in your local area that handles taxes. Talk to them. At this point, when you're finally bringing the money in, you're going to be making enough money. You probably do need to talk to a tax guy anyway. So find somebody local, talk to them, and I'm sure they can help you out. But I am not a tax professional. I don't pretend to be one on TV or anywhere else. So don't ask me because I can't help you. But you do need to find somebody, like I said, especially if you live in the U.S., because I know you're going to have tax issues, and other jurisdictions will probably have the same. So anyway, that's all there is on this section. Next video, we'll talk about doing the setting up charts and setting up the accounts, and then we'll get into the method itself.